Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating the session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so I'm pretty sure most of us out there are familiar with the question process. Joining us for the first time, we do have a limited Q&A portion at the end of the session, so I will leave that slide up there for you to review. And in the meantime, I just wanted to talk to Rob a bit about, well, excuse me, I had a cough in my throat there. Still dealing with it. The S&P broke above excuse me, sorry there. The S&P broke above 420, but it's come to a dead stop since then. And I'm interested to see what Rob thinks about that. And as well, of course, interact with you all live. So thank you for joining us for this live session. And at this moment in time, I'll introduce the man of the hour who we're all here for, and that's Rob Roy.
Hi, everyone. Welcome to TradeFinder Live. I think I got it for a while here, Zach. Hopefully you can go get some tea or whatever for your throat. I know you've had a long day of talking, so we'll try to take most of those reins away from you. As I turn the video on, y'all be able to see that have been watching with us for quite some time. I am back up in the mountains. Bit of an unexpected trip. Came up Sunday, family medical issue. If all goes well, I should be back in the Dragon Capsule for Thursday night's insiders meeting. So fingers crossed there. So that's why the different background. If you're new joining us, this is Mountain Cabin is the background that you're seeing here. All right, so I'll go ahead and share my screen, and then we will get into what Zach was talking about, which is the fact that the S&P broke above 420 and then just hit the skid. So the last 2 days, the start of this week, we've gone nowhere. So a little bit of a break here and then stopping. We were a bit overbought on Friday from the 10-day moving average, not tremendously, but a little bit, and we have a little bit of a gap there. So question becomes, do we come back down and test 420, which I think would be likely, considering the fact that 420 was resistance for so long. I mean, we're going back to last year, early last fall. 420 was resistance, and so breaking above that, when you have a resistance area that takes that long or lasts that long, normally it's you come back and test it and see if we fill that gap. We still have this massive ascending triangle pattern here. I still think it's too early to give the all clear that this is going to be an upside breakout. So we'll still give it a couple more days and see what happens. But if we come down here, make a successful test and take off, then I think we start looking long. Whatever's going to happen is going to be a significant move. We'll look at the VIX in a little bit. The VIX is very low, but I just don't know how much the VIX is telling us anymore. But we will take a look at it and show you that. So that's the only question. Do we come down, fill this gap, test 420, and then take off? Or just consolidating this overbought condition from Friday, and then we move higher from here? Either one of those is okay. Before we start looking at any of the other markets, I thought I would show you this. This is reminiscent of where we are right now and reminiscent of what I remember from the .com era. Back in the late 90s, when any company that had an I, a .com, an E, or whatever in their name just got an immediate massive valuation attached to the stock price. This is GitLab, and their earnings report came out. It was a better than expected report, but it was a better than expected loss. So it still was a loss, just better than expected, but they unveiled their AI. And you can see what happens. And that's what's been going on for the past 2 weeks. As you're aware, if you've been watching anything with the markets, I say is you got an AI plan, or you got something in the works with AI, and immediately you're getting a massive valuation attached to it. So I just thought that was pretty reminiscent of what's going on right now. No other reason to show you this chart other than here's a company that reported a loss but said AI and rocketed to the upside. So that's the market that we're in right now. And that makes me nervous too, because I remember those days when we didn't know what the internet was going to be. We didn't know what it was going to do. A lot of companies got massive valuations that were losing money. Most of them went by the wayside. The ones that survived did really well. And I think that that's what's going to happen here. The leaders are going to probably do well. AI is the way of the future. But there's a lot of these companies that are saying things like this that just aren't going to be around or aren't going to last or going to get bought up. All those kind of things occur during this kind of a market. So there's very few stocks driving this market higher and above 420. If we look at the TNX for the 10-year, it was pulling back down, wondering if money had moved into the bond market, and it stopped as well. So we came down, bounced back up a little bit. We're still in that sweet spot, though. If you've been watching for a while, you know I've been saying this for a very long time. I think the sweet spot between 34 and 40 on the TNX is a good area for the market that's conducive to the market moving higher. We can go a little bit higher on rates and still be okay, obviously, because we broke below 420 with rates moving to the upside. So this is, as I said, the sweet spot, but we are in a qualified 5-wave pattern, but just barely. That wave 4 right there to 78.6% fib level. If Mr. Elliott was here, he'd be saying, yeah, that's probably going to get disqualified. He didn't like it when a corrective level went above 70%. But he acknowledged that 78.6% is the actual spot because that's the last fib level before disqualification. So perhaps we're just moving into a trading range here, and that is conducive to the market going higher, in my opinion. If we stay between 34 and 40, looking at the dollar, same thing occurred here with the dollar. Looked like we were going to start to pull back a little bit. No 5-wave pattern in the dollar now, so it's in corrective mode. So that means it's going to go sideways too. So we had this run back up. Looked like he was going to relabel, the chart relabel, and then we've relabeled again to no Elliott wave, 5-wave pattern. So that means corrective mode, and that could mean a channeling range or a churning range here between this 101 level and 105. Also, I think could be constructive to the market potentially moving higher. They're both in danger area of breaking out of that upward end, which I don't think would be good for the market, but we're not there yet. And as long as we're staying in here, we keep an eye on what happens with that potential test of 420. So really interesting things going on in the market. I'm going to go ahead and show you the VIX now, and then we'll get to the rest of the markets. But when you take a look at the VIX, that break to the downside here, we broke below this area right here at 18, and then we had built a little bit of support here around the 16 level over the last few months. We've broken that as well pretty significantly, a bit of a vertical move lower. How low can we go? Well, if you go back historically, we've had the VIX down at 12. We even have gotten lower than that. So there's still some room, albeit not a lot, for the VIX to go down, meaning that the market could go higher. I still think we have the path of least resistance to the upside. So even though we've broken above resistance, as I said, it's not all clear yet. You still have to keep that cautious mentality, pick and choose your spots for directional trading until we have really confirmation that we are indeed off and running. And then, then it's all bets are off. So you go long at that point in time, and we see how low can the VIX go. That'll be the question if we continue to break to the upside. If we look at the DIA, when we look at this market, we're kind of in that trading range still. So no 5-wave pattern still on the DIA, and we're right in between this level of 330 and 340, which is pretty much where we've been since March. So hitting 340 on the highs, coming down, testing 330 on the lows, and now we're right in between there. Bit of a doji there on the DIA, so something could happen out of the Dow tomorrow. We'll see if that means that we look to break one of these two levels. But just a sideways churn right now on the DIA. Looking at the Qs, and I'm sure everybody is interested to see what's going on with the Qs, and relabeled there to this wave 3 to the upside. Getting a bit vertical here, though, and that always makes me nervous. If you've been watching again, you know I don't like when things go vertically to the upside. This 45-degree angle churn here was better, in my opinion. So when you see this kind of thing, it gives you a little sense of that FOMO, fear of missing out, that we had this move to the upside, which people weren't really believing. And then we go vertical, and that's where everybody's like, oh, I'm missing this move. I got to get in, especially with all the AI stuff that was going on. And that has driven the Qs just a bit vertical. So we're still overbought on the Qs. We could come back all the way down and test 340 and still be really qualified for a continuation of the wave 3. If we hadn't have gone vertical here and just stayed in the 45-degree angle, even though we're a little bit overbought, I would say, well, we don't have to come back and test the support area. But going vertically up like that, perhaps we do need to come back down and give a little bit of it back before we look to see if we can go higher, at least get back to the 10-day moving average. That's very likely to happen. But that wave 3 is pretty impressive. Looking at the IWM, for those of you that look to small caps for your view on risk on, risk off, look what's happened. We've broken above that 180 level. So we had been in this range of 170 to 190 for a very long time. And then we even tightened the range out to 170 to 180 until Friday. And look at that move in the small caps today. That's pretty darn impressive. So it isn't a 5-wave to the downside pattern, but there's past that 70% that Elliott wouldn't like. He'd be looking for this to become disqualified. So the 5-wave pattern to the downside to become disqualified on the IWM. But the fact that we significantly broke above 180 today, I think is meaningful. So now the question is, are we going to go up and test that upper level of the range that we've been in for over a year at 190? But big move to the upside there. I think you want to look at volume when you see something like that, and look at the volume that was behind it. So there was definitely rotation into the small caps. That's a positive for the market, in my opinion. I do look for not just the small caps to give risk on, risk off thing, but you want market rotation. We don't want it to be just those big 5 tech stocks that have been driving everything. We need the rally to broaden out if it's going to last. That appears to be happening, and especially when it's occurring in the small caps with good volume, you have to pay attention to that. So we do keep an eye on the fact that this could indeed be an upward breakout of this huge triangle on the S&P. I just want to see if we fill this gap and test 420 first. If we do that, if we have a successful test, and I think you start looking not quite back up the truck or load the boat, but you start looking to put on a lot more directional trades to the upside if that occurs. Almost there, not quite there. So let's just keep an eye on it and see where that goes from here. You probably heard the news on, it wasn't Bitcoin, it was on Coinbase as far as the the regulatory bodies. We talked about that when we looked at Coinbase in the past. We're saying, we need to keep an eye on that. You put a little scare into Bitcoin today, but rallied right back. And so here we are, right back to 27,000. It looked like, oh, here we go. There's the break. Remember, we've been talking about the analogy of your fingernails hanging on a cliff here with Bitcoin at 27,000. And earlier, it looked like, that might be a problem because we had broken below 26,000, which we had come down and tested. We've never confirmed a break below 27,000, and we didn't this time either. Getting right back up there, and as we speak, we're just above 27,000 as well. So those of you that are new that are watching, I know it trades 24/7, but it does give an end-of-day print, just like futures, et cetera, for end-of-day charting programs such as this. So the fact that it whipsawed like this and ended back up near the high, certainly a positive for Bitcoin. Another thing that people look at for risk on. There's a slight argument there on, does that mean that money is looking at Bitcoin because it's concerned about the banking system, the regional banks? That's been a talking point, especially towards the end of last week. And we'll see how this plays out. Some are thinking that there may very well be some more banks to go down. So far, it seems like the lending facility that the Fed created for regional banks has been working because we just haven't had that kind of news. Nonetheless, we do have a large descending triangle here on Bitcoin. And as we've noted many times, for those of you that are new, there's a lot of information out there on triangles. People say a descending triangle breaks to the downside, ascending triangle breaks to the upside. I can tell you, I've done so much research on triangles. The data's not there. whether you have an ascending, symmetrical, or descending triangle. They can break either direction, and that's what you want to wait for, the directional breakout, or put on a strangle to where you don't care which way they go. But if you're trading directionally, don't get caught up in this. It's going to break to the downside. As I said, look like that earlier today, and it may break to the downside because I've talked about this quite a bit too, that not much of this, a little bit was today, of this vertical move from 20,000 up to 27,000 has not been retraced yet. So we went vertically up. Some of that usually gets retraced. Hasn't happened yet, but it may be quite some time before that occurs. We did retrace all of this vertical breakout from this move here on Bitcoin. I'm spending just a couple extra minutes on it here because really not a whole lot has changed, but it was in the news today. So I thought I would go through and talk about that as far as what was going on with it and why we had this big tail here. And that was on the back of the regulatory Coinbase stuff that was occurring there. So still watching 27,000. That's the key. That's all you really need to know about Bitcoin is right down 27,000. Keep an eye on that. If it breaks up with follow through or breaks down with follow through, that's where you can look for your directional trade coming out of this descending triangle. Let's see what our friends down under are doing here. We had broken below 23. We had gone down to 22 and had a little scary moment there last week, but no follow through there either. Back above 22. But since 23 is so meaningful, doesn't really matter on the EWA until we get back above 23. So when you look at that, major point of support resistance there at 23. And I just think you got to be cautious here. It is a 5-way to the downside pattern. Didn't quite make it to 70% here. So by the skin of its teeth there, Elliott would still be okay with this pattern. And we'll see if we can break back above 23 and then look to disqualify this. But we're not there yet. As you can see, we did get back above the 10-day moving average, but we haven't broken above the 50-day moving average either. So you'd want to see both of those occur before you're comfortable going long in the Aussie market right now. So back above the 50-day, back above 23, and then you can look at the EWA if that's something that that you're interested in. All right, so let's take a look at Canada, the EWC, and we broke below 34 and came down into the area of 33, but rocketed right back above it. Looked like if we didn't hold 33, we're easily looking at 32 down here where this wave 4 is, and it didn't happen. So here's an example here. You can see the wave 4 here on the Canadian market did hit 78.6. Elliott wouldn't have liked it, but that's why, if you're wondering, well, if Elliott doesn't like the 78.6% level, why does the pattern still label it once you pass 70%? There's why. He does admit that the 78.6% level is a fib level, so he put it in the algorithm, and that's something that you have to watch. But I think he would tell you that when you get to a corrective level that moves past 70% and starts testing that 78.6%, more often than not, it's going to disqualify, but not all the time. So it is in the algorithm, and that's why it labels it. So it would have been a very valid question to say, why does it even show that then if he doesn't like it? That's the reason. It is a fib level, and so he acknowledges that, and that's how it works. So back above the 50-day moving average here on the EWC, but we're in a corrective mode. Coming down and holding 33 and getting right back above the 10-day moving average is impressive there. So a little similar to what we did with the gap up and then sideways, but a little stronger day today in the EWC than we had in the S&P. So if we can get back above 35, that's what you're going to be watching. If you're wondering what level do I watch on the EWC, it's 35. You got to get back above that, but certainly constructive that we got above the 10-day and the 50-day moving average in today's move. Pretty impressive there. All right, so the INDA been so strong and still is, and we are really close to officially disqualifying this pattern. That wave 4, again, right at the 78.6% level. So what you're seeing is a lot of these patterns could be relabeled here soon and have completely different looks. Probably by the time we talk again next week, if we continue to hold this and move higher, the level that we talked about for so long here was 41. That goes all the way back to early last fall as well. And it came down, held it, a very impressive test of 41 and moving back to the upside. So if this becomes relabeled, disqualified pattern here, you're looking, I think, pretty easily at a move on the INDA up to 44. So it won't take much to officially disqualify this from here. And then you have a pretty free run up to that 44 level. So another one that's fingernails hanging on to this 5-way to the downside pattern. Still qualified, but just barely. And then let's see how the folks in Germany are doing, the EWG, which also had been doing very well. It's taking a little bit of a breather, but not too bad. The negative is it is below the 50-day moving average, and we had a negative 1030 cross. So now we look at this area here at 28, which we tested towards the end of last week. It held, successful test, no follow through to the downside, but we're just barely back above 28. What you want to see if you want to be long the German market, for the EWG at least, is a break back above 29. If we can get above 29 and start moving, then we're likely extending this wave 5. Perhaps that relabels and this moves to a 3, but it's got to get above 29 and break this previous wave 5 high first before we find out which of those two is going to occur, an extended 5 or a relabeling. So far, we're just going to look at this area between 28 and 29 and wait for the EWG to tell us which way we're going. The reason I say that is if the wave 5 is over, if we do break below 28 with follow through, then it's probably looking pretty ugly globally, because on the EWG, the previous wave 4, which is what usually happens when a wave 5 ends that has not exceeded 100% extension, you go back to the previous 4. So a break below 28 with follow through is looking dicey, but we're not there yet. And again, it tried last week and it was a failed break of 28, no follow through. Roback, that's why I talk about this so often. And I know those of you that watch week in and week out are tired of hearing these general rules, but this is why there's perfect examples of them week after week after week. You have to have follow through when you break out a major point of resistance or support, or break above a major moving average out of a triangle, whatever. The follow through day is key. There's a lot of head fakes that occur in the market to suck people in. You have to be patient and not get caught up in those moves and let it confirm whatever the move is, then you pounce. But wait and look for that good confirmation before that occurs. So that kind of gets us through all the regular markets. I imagine when we get to the Q&A at the end, you're going to be asking about the AI stocks. So I won't talk too much about them, but I did want to show you one of the alerts that we have on our website at ewotrader.com. You know, we do TradeFinder every Tuesday night, and we look for these case study considerations, which we'll go through in a minute. But on our website, ewotrader.com, we have an alert service where we send out entry alerts, alerts for any adjustments, and alerts for exits. So we kind of send you out alerts for all parts of that. And one of the things that I wanted to share with you here is something that I learned from my mentor. And if we go back and look at this, so this was on LYFT, and as you can see, it was a long put butterfly, but look what the strikes were: 7.5, 10, 12.5. That was the butterfly. And when we looked at the entry, you could see where we were down here on the chart is we were down at the lower end. So normally when you put on a butterfly, you're looking for range bound. So you'd be kind of wanting to put that mid strike somewhere where you were. And I wasn't a big fan of butterflies early in my trading option days because I really wasn't that excited about sideways trading. And it was my mentor that showed me how you can gear a butterfly to have a directional bias. We can put them well out of the money and make them a nice directional trade. Like if you have a C wave extension on a zigzag, you have a 5-wave extension on a 5-wave pattern, you can put on a very inexpensive butterfly that's out of the money. So not a lot of risk. And if it moves in your direction, you don't have to get within the wings, which is what I thought way back in the day when I first started trading options. If you're just right directionally, you can make a nice gain on a very inexpensive low risk butterfly without the stock ever getting within the wings, as long as it's moving in that direction. And I never realized that you could make a butterfly directional. He's the one that taught me that. That's why we do these kind of things. So we share things that we've learned over time. I've been doing this for over 27 years now, which is a really scary thought when I start thinking about that. But we wanted to share those things with you. So this was set up to a slight upside bias with the midpoint here, figuring that we were holding support down there around 8.5, and the likelihood is that we would probably move up to 10. So if you get kind of a range bound move, but you drift to the upside in this case, it kind of adds to the potential return you can get. And here's what happened. You can see we moved to the upside, exactly what we thought was going to happen. So not only did we have this time in between the wings of the butterfly, but we also had a little bit of a juice here from the directional bias. So we got here and we had a doji. So we're wondering, okay, does that mean we're going to make a reversal here? And on top of that, we're sitting on an 80% gain in 25 days. And that's about the time frame on these AI trades. This is AI based, by the way. So we do have our own AI, the time strategy. So AI helps us with these trading ranges and giving us a score on a time frame. And the reason it was a little better than average gain is because of that slight directional bias. Even this, as you can see, was below the zero line. So a little bit of a drawdown there before the move to the upside as it rocked up to that midpoint. So great trade. 25 days, 80% on a butterfly, which is pretty amazing. So I thought I would go ahead and show you. Well, you might be curious, what did LYFT do after that? What has it done in the few days since we exited? So here's where we were when we exited it. And if you look at it now, boom, it continued higher. Now it's gotten above 10. So with a put butterfly getting above 10, that would have hurt that in the money put. The mid puts would have lost some more value, but you would have lost some on that high delta long put. So at least at this point, we generated a better gain than we would have if we held it. So right now is where it's interesting, because you look at it and say, okay, well, all it did was come up and fill this gap, which was very likely, right, when it was moving to the upside. High likelihood it was going to come test 10. You all know the importance of 10. I hope you know that. We've talked about that in the past with institutions, mutual funds, et cetera, and the fact that they have to be at least growth as an investment objective in order to own stocks under $10. And so when they don't like it when it goes below there, and they tend to bring it back. So coming back up, at least to fill this gap, was likely, but 80% gain already, and it made the vertical move. Who knows? It could have reversed on that doji. Now, the question is going to become, the Monday morning quarterbacking, right, will be, all right, does it move back down and hover down here around 10 or just a hair below after filling this gap? If that occurs, then we could probably look back and say, hey, you could have made even more if you'd have stayed a little longer. But one of the things that I like to tell traders, especially newer traders, is if you take off a trade because you are happy with the gain at that point in time, don't second guess yourself, or you will drive yourself nuts. Don't do that. So just if you have a nice gain, you were happy with it when you took it off, be happy with it. Now, it doesn't hurt to go back and see what happened. That may factor into a decision you make down the road from a technical standpoint, but not looking at this saying, oh, gee, I wish we would have waited. And I won't say that if it does back off and we could have made more. 80% was a great gain. We were happy with it. And so whatever happens from here is fine. That was a great trade. And so I just thought I would share those thoughts with you. All right, as I mentioned at TradeFinder, we do look for case study consideration. So let's go and look at a few that we have that would still be kind of listed, I think, as open. If you were following along with these, we go back to April 18th, where we had this triangle on EMN, Eastman Chemical. And then we talked last 2 weeks about how this one looked like it was going to make two false breakouts, which that never happens. You can get a false breakout one direction and then a big move the opposite direction, but you don't get two false breakouts. What's going on when you see that is a larger triangle is forming. Now, it looked like maybe we were forming a larger symmetrical triangle, but now you can see what's really going on here is we have a very large descending triangle that's formed here, and we're at the upper trend line. So perhaps we break out. It's frustrating when this occurs. When you put on a triangle, you're buying a call, buying a put. Time decay is the enemy of that trade. So it's frustrating when it takes time like this and forms a larger triangle. Usually you get rewarded with a larger breakout when that occurs, and often a more volatile breakout when you make a larger triangle. But in the meantime, with the time decay, it is frustrating when that occurs, but it does look like something's going to happen relatively soon here. Perhaps we break out of this upper trend line and then we take off and run there. As you know, we have a very long term. We actually sent this out as an alert to our subscribers as well. This is all the way out to November, and that was not our norm. It's in our speculative portfolio going out that far. It is in a wave 5 to the upside pattern. It was at the time, but also had some really good fundamentals behind it. Now, we do like to have solid fundamentals backing good technical patterns, but we're primarily technical traders. But looking longer term with that kind of solid fundamentals, you think at some point in time we're going to go higher. Well, we have, as you can see here, we moved to the upside. We came back down and tested it. We moved back, a little bit of a move down today. Now we are in a 5-wave pattern to the downside, but we'll see how that plays out. But so far, so good on the fact that we're higher than we were before. And there's a gain here. But remember, we're going all the way out to November. This is not one of the shorter term trades that we look for. We're looking for well out in time. And the expectation is that we likely come test these highs around 7.5 or so. So low dollar stock, way out in time. And we'll see how that plays out over time. So we're going to have that one on the list for a while, is my point. Now, here we come to the home builders. And we talked about this last week, saying that, well, the home builders were looking at MI or MHO, MI Homes was looking better than some of the others, or the other one, LEN, Lennar. We'll look at that chart next. And look at that. Had to move to the upside and said, well, if you didn't take that off and we're still watching it, we needed to hold this area here at 70. Well, it did. Well, now we're getting to the point where if you've been following this one, you probably want to start thinking about, hey, maybe I want to look at taking some gains here. So we've gone from 67 to 75. That's more than 10%, which is what we're usually looking for, movement out of the stock price. So I think it'd be a good time to look at taking that one off if you hadn't. Now, Lennar is the one that you might have looked at taking off. And you can see what happened with Lennar. So here was the move down. And we said, well, if you didn't, you had a little gain and then it pulled back. And it pulled back. So we were at a loss at that point. But it did hold 105. And so we said, if you're still watching this, you might as well give it the 105 level and see what happens. And rocketed back to the upside over the past few days, especially today. Again, it looks like rotation moving. Some of those big stocks that were flying have calmed a bit, and money seems to be looking elsewhere. Bigger breadth, wider breadth is a positive. So that's looking pretty good. Now, I don't know if you'd want to go ahead and take that one off yet, because it's just kind of back a little bit above where we were, especially with this drawdown here. But it's sure nice to be back at least where we were, a little bit above. So I think MHO likely needs to go. If you're still following it, you might give Lennar a little more time. But with that said, we take a look at where we are after today's close with the 10-day moving average, and we're at a big point of resistance here, right there at 115. We did close above it, so you know what's coming, right? What are we looking for tomorrow? Follow through. If we have a higher close tomorrow, I think you stay with it. If it backs off, then maybe you say, okay, well, if I did them both, I got a nice gain in MHO and maybe a slight gain in Lennar, and that's good for 2 trades, and I'll just take them both off and go, especially if it starts to back off. But if it closes higher, then maybe you want to give it a little more time due to the fact that it's closing above a major point of resistance, and see if it has follow through. But it's vertical. So a couple of things here that are, you got to watch this close tomorrow, I think. The fact that we're separated from the 10-day moving average quite a bit, and this move has been vertical. So a test of 115 is okay, but if it breaks below 115, that changes the narrative for me. But really interesting to see how these patterns, at least Lennar specifically, that just last week looked like, this is going to be a loser. Not so fast. It turned around and rocketed back to the upside. So good result on MHO. Remains to be seen on whether or not we have a small loss break even or a nice gain out of Lennar. We'll see how that one plays out. Looking at Dow, and this is when we moved into strangle mode due to the fact that the VIX was so low and the market was going nowhere, hadn't broken above 420 at that point in time. So you can see Dow is a nice triangle to it, a really well-formed symmetrical triangle. The strikes on this triangle aren't that wide. So we broke to the downside yesterday, last week. And this is a good example of why you don't rush to take one of the legs off. When we're moving down here, you're easy to say, well, let me take the calls off. So, because, if you have a call and a put, when you break out of a triangle, one option's making money, one's losing money. So the immediate thought is, well, let me take that one that's losing money off, and then I can make money faster. Well, here's one of those false breakouts so far. So we came down, tested support. Now we're right back to the point of the breakout. And if you had taken the calls off down here, now you're sitting here thinking, dang, there goes the gain in the puts, and I don't have calls anymore. So now I'm losing money. So you wait until one of the options at least gets you to where there's no risk in the trade. Then you can take something off. But wait, don't be in a rush to take one side off. So perfect example there. So we'll just wait and see which way Dow decides to go. Now let's come back to test this breakout level. And you could look at this and say, well, is this one forming a larger triangle as well? And that's a good question. Do we just morph into a larger descending triangle? It was a pretty well formed symmetrical triangle, but it did come down and test that support level for March and bounce back up. And now we're right here at the point. And if you did draw a trend line from the lower highs, you have a descending triangle. So a pretty interesting pattern there. That usually doesn't happen that way when you have such a well-formed symmetrical triangle to form a larger one. But it did in this case, and nothing's 100% in the market. So another one where be patient, let it make its break. It will do that. And then 2 weeks ago, we looked at Emerson Electric. And so we had a descending triangle there, and another one that looked like it was breaking to the downside. Looks like there we go. And here we are. And look, it looks like we're trying to break to the upside here. So two great examples of why you don't rush to take one of the legs off. You don't want to guess. I go back to a story. It was way back in my early days. I was in Orlando, and a guy was talking about, he was telling me about a trade that he had made on a biotech company, the pharmaceutical company, not biotech, pharmaceutical company. And it had a really nice triangle. He put on a strangle, and they had an expectation of their phase 3 trials to be announced. And because of the way it works, they don't officially tell you when they're going to announce the phase 3 trials. But a rumor had leaked out, and so the stock had broken to the upside. And his thought was, hey, somebody knows something. The phase 3 trials have gone well, drugs are going to get approved, et cetera. And so he took his puts off and doubled up on his calls because he's going to hit a home run on this trade. Well, you already know how the story ends, right? News came out, phase 3 trials were not good, no approval, stock tanked. And he had no puts left, and it doubled up on his calls, and it was a massive loss for him. So good examples of just be patient. It's not easy at times with the triangles, but usually, again, you get rewarded in the end. But it's frustrating when it takes longer. It's nice when you have a triangle and just breaks out and runs. You get plenty of those too. So anyway, that's a lesson regarding triangles there. And then last week we looked at lows, and we were struggling to come up with something. It isn't a symmetrical triangle. It's got a pretty wide mouth. A lot of intraday volatility here as you move to the point, though. So maybe not the greatest example of a triangle in the world, and a little bit of a breakdown here, a little bit of a break back to the upside. So again, you can see what we've done here. Clearly, it's just extended the triangle out, made a little bit larger triangle, and not much, just a little bit larger than what we looked at last week. So I think if you're following this, stay with it. But we'll watch this pretty closely. Normally, as you move to the point of the triangle, you don't have this large intraday volatility. Usually, as you're getting to the point of the triangle, the intraday volatility stops, where it slows way down, and you get much smaller bars here as you move into the point. So that could have been a signal there that, hey, we're probably not done forming this triangle yet. So already we've got 3 smaller days, at least the last 2 days to start this week have been smaller. So perhaps now we're forming the point in this larger triangle, and we make a break from there. So that kind of wraps up where we would be with our current case study consideration. So let's look and see what we can find for today. By the way, if you're wondering what the software is, if you're new joining us, and welcome to everyone on the various live media social platforms out there. We have this program called Private Source. It's from the Hub organization, HUBB.com, Hub software. You can find out more about it there. To me, it's the best LYFT software that exists on the market. I've tried all the ones that I know to exist, and you can create your own searches. And these right here, these EWO ones, are my searches. So our EWOTrader.com alert subscribers that also have this program also get my searches included in there. So you can see what I'm looking at each and every day. Now, notice that there are now 7 results on the impulse search. That's a lot. Averages 2 or 3 a day, sometimes 0. Seen 10, but 7 is in the upper end. So is that telling us something? And the fact that you don't see NVIDIA or any of the other companies here, but look what is here. Lennar. How interesting is that? That was there and then it backed off and now it's back on the list again. So another reason why you want to give it an opportunity to have some follow through tomorrow and see how it plays out. So we've got Generac here. We'll take a look at a couple of these with this many and the fact that we have broken above 420. Maybe we can look to see if we can find something from an upward directional bias here. When you look at this, no 5-wave pattern. Looking at the DMI, it hasn't quite triggered yet. And if you wonder, well, why is it on your search if it hasn't triggered yet? Well, I have it set this way purposely. When you have separation between the 2 directional indicators, the ADX tells you the strength of the move, and you want to see that ADX curl up above 20 between those 2 indicators. But if you just set the search to show you ADX is above 20, well, sometimes, it's at 25, 30, whatever, and you've missed some of the move. So I have it set this way to where I can put some of these on my watch list, keep an eye on them, and catch it right when the ADX closes above 20. And if you have good separation, all the rules of DMI. We also have a lot of education on our website, and we have sessions on all of these confirming indicators that we look at. Not in love with this one, and the ADX isn't there yet. So let's go back and see if we can find something else. Green Brick Partners. I'll see what that one looks like. Well, that's a different story. Now, see how we had some give back here to this vertical move. At least some of that got retraced. It's in a wave 3. Not really familiar with this company. It consolidated that big vertical move above the 10-day moving average. So we gave some of it back. At least there's been some retracement there. And another good day today. Let's see what the DMI looks like. And that one's trying to curl back up. So here's the thing. When you have the setup, and this is the DMI here telling you that was a very strong move, and then it backs off, and then it looks to set up again. In other words, the 2 directional indicators came together, almost kissed. A lot of times they'll actually touch, I call it kissing, and then they go back apart. This time they separated, and the ADX is curling up. I prefer it if it comes down a little further than that and resets up. It tends to show that there's more of a move still to go. So there's no doubt the DMI is telling you there's strength to this move, and it may very well continue. For me, I would want to see follow through from what happened today. We're kind of just testing those 2 highs from May. We'd want to see a breakout above that with follow through, and I want to see a little more of a curl up. The problem is that it's almost at 40. So if it curls up, we're kind of already getting into overbought conditions. So I don't love that one either. So let's go back. Those all could still go to the upside, but let's see if we can find something that looks to where it follows all of the rules. So a wave 3 here on Primoris Services, symbol PRIM, and we look at the 10-day moving average, and we tap the 10-day moving average on the low. So that wasn't really a overbought condition, even though we closed above it today. Big key here, you know what's coming here as well. Closed above 28, which was resistance. You can see it bumped its head against it for a while here. That's pretty classic looking move where you test resistance and then break above it. So we want to see if we can have a little follow through with that tomorrow. And if we do, then I think we have a pretty good move here, at least up to that wave 5 target. So we'll see how this one trades out tomorrow. I kind of like that setup. It's not a big move. Percentage wise, it's not bad. It's just point wise, it's not too high. So I'm going to go ahead and write this one down with just the caveat that you don't want to see a lower close tomorrow. So watch the close. And yeah, I'm old school. I know everybody has spreadsheets and fancy stuff that they type. I still write stuff down and have just tons of yellow tablets that I still just handwrite everything. And part of the reason I do that is because I like writing things down. I think it helps to remember it. So watch the close on 6-7 here on PRIM. So we'll put this one as a conditional case study consideration for this week, depending on what happens tomorrow with that. So give back during the day is okay, but you want to see a higher close tomorrow. So let's just take a look at one or two others and see if maybe we can't find something that might be a little bit better, and then we'll get to the Q&A. Chris River Labs here, and yeah, that doesn't have much of a move left. So here we're going back to that previous wave 4. This is an example of what I was talking about. It came down and tested the support area, broke down enough to label the 5. So we're at 201.5. Well, there's this one can probably go to 210 is likely what's going to happen here. So I don't know, maybe we'll put that one down too then, CRL, and say up to 210. It doesn't look like it's that big of a move on the chart, but then each one of these blocks over here is 10 points, not 1 or 5 like they often are. So I think that the CRL goes up to 210. So we got a couple of them to look at. So with that, Zach, I'll bring it back over to you. Hopefully your voice has recovered a little and answer a few questions.
Yes, thanks, Rob. I got some water, so voice is in good shape. Thank you for that highly intellectual analysis per usual. And now that you provided that, what does your crystal ball say that is definitely going to happen?
There is no such thing. I had one at one time, it broke, and that's it.
All right, well, we'll just go with your analysis then for this evening. We'll go over to a question from Harvey. Harvey has their hand up. We would love to hear your voice. We unfortunately just don't have enough time for voice questions in this session. So I will go over to Harvey's questions in the Q&A here. First one is, isn't the IWM too far from the 10-day moving average?
Well, it certainly was a big move today. So if we go back and look at it, see, here's the thing. Again, it was very close to it on the open. So when I look for the separation there, yes, it's way from the 10-day moving average, but then you look for what could happen the next day. Could it follow through the next day? When it virtually tapped the 10-day moving average on the low of the day, then I think you could still go higher. It may not. I mean, you could be right that it might be too far away and that we need to come back down. It would not be shocking to see the IWM come down and test 180 since it acted as resistance for a couple months here. But there is a possibility, more of a possibility than normal with the separation that we could have follow through tomorrow, just simply because the start of it was really right at the 10-day moving average. Usually when you have a couple days and you get great separation, that's when you're kind of running out of steam. So we could conceivably go a little higher to that tomorrow, especially with that 190 level there. But very good question.
Agreed. And the second question from Harvey is, what do indicators say for Dow, like ADX, DMI, positive and negative?
Are we talking about the Dow Jones market or that stock Dow?
It just says for Dow, so I'm not 100% sure on that.
Yeah, well, we looked at the stock where we have the triangle, so I'm assuming that maybe you're looking at the market, and on the stock, it's exactly what you would expect to see in a triangle. It's non-committal. So the ADX is moving down. Nobody's in control here. That's what happens during consolidation. So if we're looking at the market Dow, looking at the DIA with this trading range here, huh?
Sorry, it was the stock. I just wanted to save you.
Okay, all right. So
further questions.
So that's it. Yeah. So I'll move on. So it's showing what you would expect in consolidation. In other words, nobody's in control right now.
That is a fact. All right, let's go over to FSLR for Will.
Oh, good old First Solar, another blast from the past stock, and just stayed in that range. And we looked at this a while back, I think, and we had this, other than this little island reversal here. And if you've heard that term before, this is a good example of it. So you have a gap down, and then you have a gap back up, and it just kind of leaves these bars floating out on their own between these two gaps. So this big move here is called an island reversal. And so you get this big upward move. Now, normally you expect that to continue. It hasn't in First Solar. We've come down and tested 200. And the danger that we have here is that we broke 200 today on the close. So the question becomes, are we coming down to fill these gaps now and coming back down towards the 180 level? You know, they have to have follow through. So we'll be watching to see if there's a lower close tomorrow. If there is a lower close tomorrow on FSLR, then I think we're likely coming down to fill those gaps. But if we can get back above 200, this could be a real successful test of 200 after this big vertical break. And then you could be looking at more upside. So whatever happens tomorrow is going to give us more of an answer of where the likely next move is in for solar.
All righty, thanks, Rob. We have a question here from Young. Hi, Zach and Rob. How far will AI go? And in regards to AI, I don't know if this is just AI as a general or the C3 AI stock, but
I think AI, I mean, if it's just in general terms, maybe it's regarding the bubble in the AI stocks, because that question's been asked a lot. It will pop at some point, but it likely will go on longer than people expect before it pops. That's usually how bubbles work. They kind of wait to where people are convinced it's not going to pop, and then it's just the bubble's there and those big moves are all good to go. And then that's when it pops and comes back down, right when you think that we're here to stay. The AI itself is clearly here to stay. Some of these valuations on stocks, like I showed you with GitLab, are ridiculous. And so that will, at some point, it'll come back to earth a bit on some of them. They probably won't. The big boys will survive. They'll soak up the other ones. There'll be a lot of merger acquisition in AI space, in my opinion. That's what I think is going to happen. It just is so eerily similar to everything that happened in the .com bubble, and nobody thought it was a bubble when it first occurred back then. It was the internet was so unknown, nobody knew. It was a guess, and I think we're kind of there with AI. How far can AI go? Is the government going to step in with regulations to slow it down? Like Elon and some other people are saying, hey, we need to, AI can be good, but we're going too far too fast. And we risk losing control of it. So that's what I think is going to happen. AI is here to stay, just like the internet was here to stay. A lot of those companies that got crazy valuations during the .com bubble are no longer here, and that'll occur with AI as well. And then some mid-range ones will get swallowed up by the big boys, and then you'll have, the strong will survive and thrive and go on from here.
yes, indeed. All right, thanks, Rob. We will now go over to a couple symbols here from the Catalina. First one, ADVE.
ADV is in Victor, E?
BE.
BE. Oh, Adobe. Yeah. I heard that last time. So something with my hearing on the B versus V's. Pretty nice move there. Pretty overbought. And then we gave a little bit back here, but not much from the first overbought condition, and then turn around and now we're even more so. But we're at an area here where it likely needs to rest here. If it's going to go higher from here, it needs to consolidate a bit more, in my opinion. That wasn't enough, I don't think. And so I think even a move back down towards the 10-day moving average, I don't know that that's enough to even try a quick trade there. But some consolidation, let the 10-day moving average catch up, go sideways under 440, then break again above 440, then we could have something going. When you look at the DMI, that's really strong. So there was a lot behind this move. It's a strong move. The ADX is not quite to 40 yet, but it's not that far away. So I would be cautious not to get too excited on a break above 440 on how far it can go. But it does look like that wave 5 target is very likely in sight. I would just say that if it can consolidate a bit longer, maybe even come back or at least go sideways till the 10-day moving average catches up, consolidate this move and then break above 440, we have a much greater chance of going up and hit that target. But I think that's highly likely that you see Adobe at 470 or so in the not too distant future. But if it tries it right now, I don't know that it can. If it tries to break above 440 is what I'm trying to say right now, I don't know that it can hold it. It needs more consolidation, gather up more energy and momentum, and then break above 440. And then I think you have your run to that wave 5.
Very well. Thanks, Rob. I see we just went past 3 minutes till the hour. So I was going to say maybe 3 questions sound like a plan.
Did we lose you?
No, I thought I lost you. Can you hear me?
Yeah, I can hear you.
Okay. I guess we both just had an interruption and connection there. I was just going to say, you got time for 3 symbols tonight?
Yep.
All right. So the second one from the Catalina is going to be PANW.
Yeah, I like Palo Alto. It's good company. And it has smashed that wave 5, did everything it's supposed to do. And so now the question becomes, what happens here? It's an 85% extension with roughly a 38.2% wave 4 correction. So it's already in an extended area. The gap up yesterday with the doji kind of signaled a little bit of quiet time today. We're still overbought. We still have the gap, but it can do all that and churn within this wave 5. The DMI looks like there's more room to go. It doesn't look like it's done yet. But this is another one like Adobe that needs to rest a little bit and then take off again. So with this gap up, if it were to run now, again, I don't think that move holds. So if it can go sideways, churn a bit, fill this gap, then break higher, then I think there's still more to go on PANW. So how it handles the next couple of days, we'll tell the tale here, I think, as well.
All right. Next up, we'll go with BABA.
Yeah, pops up every now and then, but not every week like it did at one time. And all kinds of conflicting stories coming out about China's economy, et cetera. So far, they've seemed to have backed off a little bit, all the regulatory stuff that was constantly hitting these stocks. You look here, and we do have a positive cross there. So buyers have stepped in here, but it's not above the 50-day moving average yet. But it held this support really well at 80. So it did a good job of testing support. We're going all the way back to last year there as well, but certainly in March, May, end of May, and now it looks like it wants to break higher. If we can get above this 50-day moving average, so a follow-through day tomorrow, closing higher tomorrow above the 50-day moving average, then I think we're highly likely going to test that previous wave 4. And you just wonder how much more bad news can come out of China. So at some point, you feel like that has to have run its course. So I like this one a lot. I think there's a good likelihood that we go up to that previous 4. However, we got to get back above that 50-day moving average first. That's key. It could just be a test of it, and then we go back down and test 80 again. But if we break through it, you can see it wasn't able to do it last time. We broke above it and no follow through. So if we can correct that this time, then perhaps we're up to that previous 4. I think that's a really good one to watch. The ADX is down around 18 or so. So if these two continue to separate, the 2 directional indicators, and the ADX turns up above 20 and gets between these two, yeah, you got a really good looking trade there. So it's not there right now, this moment, but it could be setting up for a really good trade. So that's a good one to keep an eye on for sure, because there's a lot of room for that to go.
All righty. So we got room for one more tonight, Mr. Roy.
Yep. Let's
All
do
right.
it.
So, I do have to pass through comment here from James saying you missed one question. What about the merger between PGA, DP, and the LIV tours? And yeah, there's a lot to talk about there. That could be a whole
Yeah,
session in itself.
I almost brought that up at the beginning. Everyone, well, a lot of people know that I used to be a member of the PGA. I was a golf pro. So this whole thing is just mind-boggling. Uh, yeah, didn't see that coming. I think there were some people that thought maybe well down the road, some sort of a merger, but not only anybody saw it coming this fast and, waiting for the official details. There's a lot of people pretty upset with the tour. More of the purists that didn't like the LIV tour idea, but money talks, even in golf, and so it's going to be really interesting to see how that plays out. But yeah, that was shocking news. In fact, Zach's the one that sent me that article. I hadn't even seen it yet, and he's like, "What do you think of this, Rob?" And I was like, "Holy cow!" Didn't see it coming at all. And so, yeah,
I don't think many people did. And, those LIV players are pretty happy with their decision there. But
they pocketed the big checks. Now they look like geniuses, don't they? From what I read, it looks like the PGA Tour is going to allow them to come back. Obviously, if there's a merger, they almost have to. They can't have a merger, I don't think, and then exclude those players. So, yeah. So they pocketed big checks, and now they're going to come play for even more money on the PGA Tour. So yeah, they're pretty happy. The winner in all this, I think, is Phil Mickelson. He handled the whole thing very poorly. I think he would admit that, and the comments and all that kind of stuff. But he was trying. This is what he was trying to do. Is he felt like the PGA Tour wasn't sharing as much revenue with the players as they should, even though you look at how much money they're playing for. Like, how much money do you need? But this is what he wanted. This is exactly what he wanted. And so I think that guy he's going to be smiling as he puts his head on the pillow tonight, and probably feels a bit vindicated. And he would be a hero if he would have handled the whole thing a little bit better, and not made some of the comments that he did. But other than that, you have to say that he was right.
Like you said, he would have been a hero if it wasn't for those comments. But he's definitely feeling good with the outcome today. But yeah, I look forward to talking with you more about this offline, just to circle back into
let's go back to stock
narrative for the last question. We'll finish with Verizon, and just for any of those out there, subscribers, paid subscribers or non-paid subscribers, if we didn't get to your question, please know it has nothing to do with the validity. We just only have so much time in this session, and with that, take it as motivation to attend the insiders meeting, which is for paid subscribers only, with a 45-minute Q&A portion compared to the 15-minute Q&A portion for this session. So I'll pass back over to Rob to wrap things up, and thank you all for joining us for this live session.
Yeah, Verizon needs to come out and say that they're integrating AI into something, because it's broken through support here, and there's below the 10-day moving average. There's a negative cross. So breaking through support, a wave 3 to the downside. I don't look at the DMI as much on downward moves. And if people are wondering why, it's because the DMI is a bit of a lagging indicator. That's when we look at the CCI, which is far more responsive on a daily basis. And it's low, but it's not at an extreme point low. So it's saying that this could drift a little bit lower as well. So I don't think you can take a look at this for the long side until it gets back above 36. In fact, it may be something to look at on the short side to see if there's a little bit more of a drift, but it doesn't move very fast. So it would be kind of a slow drift lower perhaps. But if you're looking to wonder, is it time to buy it? I think you need to let it get back above 36 first, because that's a significant point of support that it broke there. And it just doesn't look like it wants to turn around and run right back up there just yet. But yeah, they come out and say they're integrating AI, then it'll rocket back up. So anyway, be a little facetious there, but it's been a wild couple of weeks, that's for sure. And so as time goes by, as we do these, as time goes by, I think you'll see the scenarios play out, but it'll take some time, just like the whole .com thing did as well. So thanks everybody once again for spending some of your evening with us. We are very respectful of your time. Appreciate it very much. Understanding time is the most valuable asset that we all have. And we do like when you spend some of it with us, and appreciate it, and do our best to make this educational, informative, and and maybe even have a smile or two. So thanks, everybody. Have a great rest of your night and a great rest of your week. Forward to talking to you again soon.